Gold spiked from 3327 to 3377 within minutes on the news that Mr. Trump has fired Jerome Powell. But it immediately crashed after that when the news went fake. But in the coming week, we have the real deal. ECB is going to announce the rate of interest, and Mr. Powell is going to come out with his first public speech after this chaos. Now, what would be the impact on US dollar and other major instruments? We need to cover in this weekly video. I'm Nikhil, and in this weekly forecast, I'm going to decode the impact on gold, dollar index, GBPUSD, EURJPY, and there is one hidden gem, the altcoin known as FLOKI, and the setup is explosive. So do not miss the opportunity and stay tuned till the end, because now I'm going to decode the setups on the charts. So let's begin our chart analysis, and the first instrument is dollar index. I would like to start from monthly time frame here. And here on the basis of monthly time frame, the previous move down, I'm just going to apply fib retracement from the highest to the lowest point. And dollar index got rejected precisely in between 78.6 to 85.4. In my previous video, I've also applied the rising trend line here. So I'm going to connect from the lowest of the chart, this is the lowest point, to the level which is in between the two highs. So basically our BUS level. So I'm going to use a rising trend line, connecting the lowest and the BUS point. And yes, the rising trend line has been breached. But now dollar index is sitting at a very strong fib support. So 96.28 provided support. But in terms of MACD, the environment is still bearish. So when I zoom in, you will find here that MACD histogram is still deep red. It means a bearish momentum, and MACD lines, they are in the bearish crossover mode with a substantial gap between the two lines, which means in the longer run, dollar index is expected to be bearish. Now I will use fib extension from the recent most highest point, connect with the first low and the lower high. So it should be red in color as it's in the bearish direction. So we got the magnet support here. So this magnet support has provided the short-lived bounce. And I won't be surprised if dollar index bounces towards this highlighted area. So basically magnet support at the bottom and magnet resistance on the top. Let's change the color of magnet resistance to red. So starting from the yellow highlighted area, I'm expecting the bounce at least towards the highlighted red zone, and it would be the perfect retest of the falling trend line, or maybe slightly higher, and then continuation in the downward direction. So in the short run, I'm expecting corrective bounce up. Now I'm switching to weekly frame. Now here on the weekly frame, I can see exhaustion in the sellers because it has formed lower low formation, and I can see containing type of divergence being formed on MACD histogram. So sellers are definitely exhausted and it needs some correction. Now I'll be switching to daily here. Now on the daily frame, I have found double bullish divergence. So lower low formation with higher low formation on MACD lines and histogram. So the BUS point would be in between. So I'm going to apply the breakout structure line here. So the dashed line is going to be our BUS line. Now since BUS line is far from the current price, it is not yet broken. The alternative method of confirmation is applying the trend line. And I'll be using the highest point of the daily chart, and I'll be connecting the line with the BUS level here. So let's apply the falling trend line here. So when I connect the falling trend line, it's already breached, already broken. Since it's a resistance trend line, let me apply red color. So the current price is higher than the trend line, which means buyers have taken the control. Now, when I zoom in and I look at the behavior of histogram, I can see that buyers are now again exhausted because we have reached closer to the resistance level. and there could be a bounce, false breakout, and then some correction happening. And then later on, I'm expecting the continuation in the upward direction. Now let's move to 4-hourly frame. So on the 4-hourly frame, the price is in the upward direction and it has completed the breakout structure. So we formed bullish divergence here, and this is again double bullish, and the buyers, they have taken the price higher than the breakout structure level, and they are continuously printing higher lows and higher highs. So I could find here bearish divergence between the last two highs, but sellers did not complete the breakout structure. So most likely this high would be taken off. So let's apply the horizontal line. So most likely 98.90 would be taken off. So buyers, they will cross this area. It could be a false breakout and then retracement, and then finally continuation higher. If I move back to the 4-hourly chart, we are on the 4-hourly chart. Let me zoom out. So the pattern would be breakout, retest, basically retracement, and then continuation. So the plan is to buy the dips in dollar index or all dollar related currency pairs. The next currency pair is euro against yen. I would like to start from the monthly frame here, and I'm fully zoomed out. So the long-term downward trend, starting from the highest point to the lowest point, got completed with bullish divergence here. And this bullish divergence is on MACD lines and MACD histogram. So I need to apply the breakout structure level here. So let's apply breakout structure line. And the buyers, they have taken the price slightly higher than the breakout structure. Then we got the retracement, and now we are in the third wave up. So I'm going to apply Fib retracement starting from the highest to the lowest. Applied. And second, I would like to apply here Fib extension starting from the lowest, end of sellers, first move up, connecting with higher low. So let's apply Fib extension in green color. So our current price is precisely on Fib extension 100%, and the next major resistance is around Fib retracement 50%. So basically the price level of 187. So going by the behavior of MACD, I can see that MACD is now ready to complete the bullish crossover. The blue line is now ready to cross the golden line, and histogram is ready to convert into the bullish direction. I can see here that we have point C because we have already applied Fib extension, and this is our point C, and it gives us the scope to apply another Fib extension in the bullish direction. So I'll start from the lowest, connect with the high and the higher low. Now I can see magnets here. So the first magnet strong is this area. This is to be taken as support. And the next strong magnet is around this area, again to be taken as support because current price is higher. And the upcoming resistance magnet is too far from the current price. So this would be around 217 to 219. Doesn't make sense to look at this resistance. So prior to this, we have retracement level of 50%, which could be the next major upcoming resistance. Now, do we have more ABCs to be applied? Yes, definitely we have one more. So I'll start from point C. So I'll just bring the vertical line here. I'll shift the vertical line to the latest point C. And now the latest point C, it turns to be new A, and I'm going to apply new ABC here. So now it has formed a new resistance zone. Yes, and prior to 187, I can see 183. So two closest resistance areas identified and applied. Now I will take help from the reverse Fib retracement on the last move down, and usually we expect the extension towards 138 and 161. Now reverse extension 161.8 is exactly overlapping and creating a new magnet resistance. So ultimate target for Euro Japanese yen would be 182.93, or to round it off we can say 183. And the area between 78 to 85 is going to act as closest support here, identified. Now we can move down to weekly. Now on the weekly frame, going by MACD histogram, the momentum is extremely bullish and strongly bullish here, because the gap between the two MACD lines is substantial and there are no signs against. So it formed double bottom. I think the Fib retracement is making it very untidy. Okay, so here I've removed the Fib retracement and we got the double bottom around 155, and from this area I can see a very strong bounce upwards. Now I'll bring the vertical line on this level and I'll switch to weekly. I'm already on weekly. I am switching to daily now. Now on the daily frame, I would like to start from the lowest point. So I can see here that from the vertical line we got another lower low formation, and it comes with bullish divergence, and we got the breakout structure. So let's apply breakout structure first. And buyers, they have convincingly broken the breakout structure level. I need to shift the vertical line to the lowest point, and I need to apply ABC in the bullish direction, basically Fib extension in the bullish direction. So let's start from the lowest point, connect with the first high and the higher low. And I would like to change the color to a different color here, blue lines. So blue lines are representing our daily Fib extensions, and right now we are on the Fib extension level, and it is Fib extension 161. So the next major resistance is coming in between 174.54 to 175.54. So the nearest target for Euro Yen would be 174.54 to 175.54. Now keep in mind that in the coming week we have rate of interest announcement from the European Central Bank. So once we get the announcement from the European Central Bank, I'm expecting euro to turn weaker. So this could be the resistance which will align with the announcement, and then we can see some pullback. But our higher time frame is extremely bullish, so my plan would be to buy the dips here. So I'll be marking a rising trend line here. I'll start from the daily, so basically the lowest point, point C, and I can connect my rising trend line, and any fall towards the trend line, so coming from this resistance point, so any fall towards the trend line, so basically if it falls towards 170, I will take it as an opportunity to buy, and after 175 the next major target would be 182. So short to mid-term plan is 175, and once we get the retracement, I'll be accumulating my buy positions and I'll be targeting 182 to 183. Now let's move the vertical line to point C on daily. Do we have more ABCs here? Yes, definitely we have. So we can mark our next ABC, applied, and I can see that this area 174.74 is reinforced as a resistance, and before moving downwards, that is at the time of announcement from ECB, it can easily rise towards 124 to 175 and then move lower. I'll quickly switch to 4-hourly frame now. On the 4-hourly frame, it is still in the rising pattern. It is continuously creating higher lows and higher highs. So this is the lowest point connected with the rising trend line. Next higher low, higher low, higher low, and higher low all over with higher highs. I do not see any sign against. There was a bearish divergence, did not impact the buyers because sellers could not break the breakout structure level, and histogram turns bullish again. So it is expected to move higher until ECB announcement. So do not add any new buy position at the moment because the risk and reward would not be optimal. I would wait for the pullback after the ECB announcement, and then I will start accumulating my buy positions. Either you can do it manually or you can enter the levels in your EA, that is ORM, and let it accumulate your buy positions. And the next instrument is pound against US dollar. I'll start from the monthly frame. Now I would like to connect the highest point with Fib retracement to the lowest point of the monthly frame. Now here I could see sellers were exhausted because of lower low formation and higher low formation on MACD lines, which is bullish divergence. Now on the basis of bullish divergence, we need to apply the breakout structure level, applied, which is not yet done. And the alternative method is to connect the highest point with the breakout structure level, and yes, the falling trend line resistance is broken. So buyers are back officially. I need to apply my first Fib extension in the bullish direction. I'll start from the lowest of monthly. I'll connect with the first high after breakout structure and join with higher low. So we reached precisely to the Fib extension of 61.8 and price level was 1.3750, and this is the strong resistance in play at the moment. I can see that bullish momentum is fading out because histogram has changed from dark green to light green, and the gap between the two MACD lines is now about to squeeze. So basically loss of bullish momentum. And I need to bring my vertical line here on point C. Let's apply vertical line on point C and shift to weekly. Now on the weekly frame, this is the highlighted area of resistance, Fib extension, and I can see that histogram has started curving down. So continuous style of MACD divergence is in play, and MACD lines are also pointing downwards. So it is an overbought and overpriced level, and it hits the perfect resistance point of Fib extension, and now we can expect some deeper correction here. So how deep it can go, we need to apply Fib retracement. It is not yet officially complete because green histogram has not changed to red. So I cannot count the highest point as point B. So I need to switch to the next lower time frame. So now on the lower time frame, I can connect the lowest point of the daily as point A with the highest point as point B. And currently sellers, they have pushed the price exactly to Fib retracement 23.6, and it comes with bearish divergence. So between the two higher highs, last two higher highs, there is bearish divergence on histogram. Now the histogram divergence is not very strong, but there is bearish divergence on MACD lines, and sellers, they have completed the breakout structure. So I need to apply a dashed line for breakout structure, applied, and the current price is sitting lower than the breakout structure level. Now this can act as temporary support because it is a Fib level here, major Fib level. So let's highlight with green as support, and I can see that sellers are exhausted because deep red histogram changes to light red. That's it. And I'll move to Forex now because on the daily frame, if this is my starting point A on the top, there is no wave completed. So this is A. I'm not sure about point B because the histogram is still red. It needs to change from red to green. So I cannot count this as point B, and point C is not yet formed. So I need to move down to the next lower time frame. So now I'm switching from daily to Forex. Done. Now on the 4-hourly frame, I can see here higher high formation, and it comes with a weird pattern of bearish divergence because this is not PNP or MACD line divergence, but definitely loss of momentum. And since then it is continuously creating lower highs. So we have highest point here, then we have lower high, lower high, lower high, and new lower high in conjunction with lower lows. I could see bullish divergence coming into picture here, but only on MACD histogram. But MACD lines, they're still forming lower lows, and MACD line is still lower than the zero level, which means buyers are weak and sellers are powerful. So I'm expecting short-term bounce here, but I'll be taking the bounce as an opportunity to sell. Now, how deep it can go? So I need to go back to daily one more time, and if it breaks below 23.6, the next destination would be 38.2. So in short, the next upcoming destination for pound USD is 1.3144 or 1.3145 applied. Now, any rise towards 35.20 should be taken as an opportunity to sell, because right now we are very close to the support level. So if we get to see a bounce here, most likely buyers would be blocked by the Fib resistance formed at Fib retracement level of 14.6 and price level of 1.3520, and I will take it as an opportunity to sell, and I'm going to hold my sell until 38.2. Now let's move down to 4-hourly and see, do we have waves here to be applied? Yes, we have the first ABC in the bearish direction. I'll start from the highest point as point A, then I can count this as point C, and this to be taken as point B. So let's apply our first extension in the bearish direction on 4-hourly frame. Do we have the conference or magnet here? Let's see. So I can see that there is a zone which is very close to the highlighted area, and this comes around Fib extension 2.618. So 1.3145 to 1.3093 would be the upcoming target, and there would be some more levels in between 1.3291 and 1.3215, and 3500 is to be taken as now very strong resistance, because I can see two Fib lines are coming together here. Done. And once we move down to 1H, I can see that sellers are in control. Higher high formation here, but a sharp reversal. Most likely, if this band holds the buyers, then I can expect buyers to go towards 34.89, maybe slightly higher towards 35, and then continuation in the downward direction. So keep in mind, we have Powell speech coming on July 22nd, so that could bring some short-term weakness in the dollar depending on his speech, and we can see some retracement upwards in GBPUSD, but ultimately I'll be looking for selling the rise. And now the next instrument is gold. I'll start from monthly, and I'll quickly explain. Monthly time frame is extremely bullish. Starting from the low of 2015, it is still creating higher lows and higher highs without any divergence, without any signs against. The two MACD lines are substantially apart, so basically there is a good gap between the two lines, so I do not see any damage in the bullish pattern on the monthly frame. I'll quickly move down to weekly here. Now on the weekly frame, I'm going to highlight the last negative point histogram. So this is the low and the highest point, because histogram has changed from green to red. So basically we have the confirmation of the low and the high point here. I will apply Fib retracement starting from the lowest to the highest. So currently I can see between the last two highs, histogram has formed continuous style of divergence, so which should bring consolidation or correction in gold. So currently it is holding the strong zone of 23.6. So it fell towards 23.6, but it never closed below 23.6. So this is to be taken as strong support. That's it. No more information on the weekly chart, but I'm switching to daily now. Now, when it comes to daily, I can see that we have strong resistance at 3436. So we got the double top formation. So this is to be marked as a resistance. And I can see that sellers, they pushed the price lower, created a lower low pattern, and then buyers pushed the price back towards the same level. And then sellers are trying to take the control now. So here I have found the rising trend line is breached. So I'm going to connect the rising trend line from the lowest point. So this is the lowest point, which is taken from the weekly frame. And this is the level in between. So I'm going to connect. So basically equal highs here, double top pattern, and this is the breakup structure level. So I'm going to apply the rising trend line here. So starting from the lowest, connecting with the breakup structure level, the rising trend line is broken. Now, since it's support trend line, let's change the color to green. So sellers have pushed the price lower than the rising trend line, and after the rising trend line gets breached, market takes a pause somewhere in between around the support area, and then we get a retest of the rising trend line. We got the retest, but somehow the move is missing. If it can go further high towards a retest of the trend line, I won't be surprised. And then we can see continuation of the sellers. So in short, because dollar index is getting stronger, so dollar is getting stronger, I'm not expecting at the same time gold to remain stronger. So I'll apply the Fib retracement from the highest to the nearest low point, and the criteria is if gold holds lower than Fib retracement 78.6 to 85.4 in terms of price 3401 to 3412, any rise should be taken as an opportunity to sell. Now in case, okay, let's move down to Forex, then I'll explain. So in case if we see the rejection of gold somewhere around 3373, which is a very strong Fib level, or around 3400 or maybe around 3412 to 3420, then what should be the bearish target? So let's imagine that gold rises towards 3401 or 3400. So I'm going to apply imaginary Fib extension in the downward direction. I'll start from the highest, connect with the low, and 3400 as point C. So the first target in the downward direction will be 3296, followed by 3233. So until 3412 is convincingly broken, my plan is to sell on the rise, and my first target would be 3300 followed by 3232. So until we see a break above, I'm holding my bearish view on gold. Moving down to 1 hourly chart. On the 1 hourly frame, I could see it created the downward move here, broke the rising trend line, and now it has created its first bullish move. This is the first bullish move, corrective leg up, but the third leg, which should be very strong in case it wants to go to the higher levels. So basically it has to create the impulse here, which is missing here. So let's apply Fib extension starting from the 1 hourly lowest point to the first high and connect with higher low. Let's change the color to green. So it has never broken higher than Fib extension 100%. So 3383 remains as closest resistance. And now I'm going to introduce an altcoin which is called FLOKI, and it's a meme coin. I'll start from the monthly frame. Unfortunately, we do not have sufficient data on the monthly frame. I'll still try to zoom in and explain. So we got a parabolic move, then we got the correction. So we need to apply Fib retracement here. So let's start from the lowest to the highest of monthly. And I'm not surprised. The correction gets completed again in between our strongest zone of 78.6 to 85.4. So I'm expecting bullish bounce from here, and yes, it has started bouncing upwards. Now I'll be moving to weekly here, and on the weekly frame I can see here that it has formed lower low pattern followed by higher low pattern. So this can be taken as the upward move, and this upward move starting from 85.4 to be taken as a retracement against the previous downward move. So in short, this is the strong down move, and whatever is happening right now is to be counted as retracement. So we need to apply one more Fib retracement starting from the highest to the lowest. Now I can see that we have the confluence of resistance here, which is already breached, and the next upcoming resistance point is in between here, followed by single line at 61.8, but again the strongest level would be around 78%. So from the current price, I won't be surprised if FLOKI bounces back towards 78.6, which is going to be a substantial move. Histogram is completely bullish on the weekly frame, no signs against. Now I'm switching to daily chart, and on the daily chart I get to see the opportunity to apply Fib extension in the bullish direction. So let's apply first ABC in the bullish direction. So we have already crossed Fib extension 100, and the next major destination is Fib extension 161. So currently it is at 0.001390, and I'm expecting it to reach 0.001734, the first destination. Then I'll be expecting a retracement from 161 towards 100, and then continuation towards 200. So if it reaches to the Fib extension of 200, it is again a confluence. Two Fib lines are coming together, so it's a magnet zone, and the price would be 0.001995. So from 1387 to almost 2000. So if you capture the opportunity, let's check in terms of percentage here. So from the current price, if it rises towards 0.1995, it is going to give you the move of 42.5% in the upward direction. So as I said in my previous videos, that now I'm expecting some short-lived bounce in the crypto market, especially in the altcoins, and the short-lived bounce could give you the opportunity to make around 40 to 50% on the selected altcoins, and FLOKI is one of them. Now let's move to the 4-hourly time frame, and on the 4-hourly time frame I could see some huge moves to the upside. It has just crossed the resistance area, but MACD has changed from bullish to bearish, so we could expect some short-term pullback, and the pullback is to be taken as the opportunity to buy with the view to hold towards 0.000199. So this is my multi-time frame analysis on various instruments for the coming week. Trading is a journey, not a race. If you want to analyze the charts like me, subscribe to my YouTube channel, stay sharp, trade smart, and I'll catch you in my next video.